Well, it's been an interesting week on the interest rate front, and most of the interesting stories have come from overseas. Sure, we got the news from the U.S. Federal Reserve, but Switzerland made its way into the headlines with a surprise interest rate cut, acting months before peers around the world are expected to do so. Meanwhile, let's talk about the UK. The Bank of England has laid the groundwork for a shift to rate cuts after one of the sharpest turnarounds in guidance in recent memory. Now, there could be some takeaways when you compare the British economy to Canada, in that the Bank of England is preparing the groundwork for a rate cut rather urgently because inflation started rapidly easing. Plus, you got to keep tabs on the jobs market. It has been softening there. So in just 2 months, the central bank that had showed a bias for higher borrowing costs is now poised for rate reductions, possibly by June. There's also a political component to a story like this, some political pressure that the Bank of England has to navigate. David Oliver tracks the UK economy. He's a public affairs strategist and founder of Minerva Strategy. Joins us here in studio. David, nice to see you.
Hi, John.
We didn't talk a lot about the Bank of England story here in Canada this week because we were so focused on the Fed. What do you make of how quickly the sentiment from the central bank there is sending to the market now?
Yeah, I think the most interesting analysis that's come out of the bank this week has been particularly the moving of the strong hawks, those that are very in favour of keeping rates higher for longer, actually shifting their positions and becoming a little bit more dovish. And actually the sentiment developing that the UK may actually be the first to cut interest rates of all of the big G7 economies. We can look at the ECB slightly separately, but potentially even as early as May, which is quite a turnaround for a bank, particularly Andrew Bailey, who was saying we're not going to be cutting rates anytime soon and really dampening down expectations. Particularly contrast that with the US, who've been desperate to try and signal a rate cut, even if they haven't done it yet.
And I guess, was inflation at the core of that previous thinking from Bailey?
Yeah, I think the Bank of England's biggest worry, as with all the central banks, has been you go too soon, but particularly the pressure, if the pressure came down on goods inflation, although, food and other important items in the consumer basket have still been high, the most worrying one is services inflation, which I think Bailey said actually is still at 6%. And that's still a worry that that level of inflation on the services side is still higher. And you start cutting in interest rates with that indicator still being quite high, that's still quite risky for them.
What do we know about the health of the economy measured through things like the jobs market? I mentioned a little bit of softening there. We, in the dialogue here in North America, this came up yesterday. We were talking to Frances Donald of Manulife. She said, you got to stay laser focused on jobs because higher interest rates and navigating higher interest rates is fine until unemployment is rising, and then you could potentially, you shouldn't be surprised if economic deterioration starts to escalate.
Yeah, and I think the UK has probably been similar to other G7 economies in the sense that it hasn't had a huge, particularly after rates spike so quickly. In history, we've typically seen a big impact on the labour market. That hasn't happened. The big story for the UK, and I think also other economies like Germany and Europe, has been it's been a stagflationary economy for the last 2 years. It's had virtually, very anemic growth since the financial crisis, so for the last 15 years. And politically, this is the big problem for the UK. It is not a growing economy and has not been for a long time. Productivity and competitiveness, a little bit similar to Canada, are not in a good place in the UK.
And I think at the end of the day, when politicians are facing questions about the economy and inflation and interest rates, comments about central banks tend to seep in. We've seen that here in North America. Everybody likes to talk about the independence of central banks, but you cannot ignore that the politicians are out there. We've seen it in this country talking about what they'd like to see from, in this case, the Bank of Canada. What about the political dynamics in the UK?
Yeah, I mean, Jeremy Hunt's been, and to some extent Rishi Sunak, have actually been very careful in their public pronouncements to not say anything that looks like they are influencing or leaning on the central bank. If anything, the opposite. Jeremy Hunt has actually been very focused on getting UK inflation down before they can consider any sort of sense of there being a collective will to see rates going up. I think the biggest challenge, though, for the UK, as with other economies, is consumers are feeling the pain of those interest rate rises. You've got 1 million people coming off their mortgages in the UK this year who would have remortgaged during the pandemic on virtually zero or very low interest rates. They're now going to be coming into an interest rate environment where you're looking at, even if there's a cut in the spring, you're going to be looking at mortgage rates, 4 to 5%, depending on the year you take out. that's going to be a significant rise. And going into an election year, that's pain for consumers.
Yeah, I did want to ask you about that part too. Just the political threads in this country. We're getting ready for a budget, and people have been trying to figure out how does the Bank of Canada navigate that. You know, what plans they want to have before we find out what kind of spending plans the federal government has. But then there's this other issue in Canada, which is, are we ultimately going to see a federal election at some point this year? Some of the pollsters say that is very possible. We just had this confidence push by the Conservatives overnight. But the election story, that is going to be a likely 2024 story, do you think, for the UK?
Oh, no, the UK election will happen this year.
Okay.
You know, the speculation has been, you know, could he go slightly earlier in the spring? I think it almost certainly seems that he will go later. So we're looking at an autumn election, and the economy is going to be a huge part of that. Labour are going to be pressing hugely. I think, you know, Liz Truss will probably be on a lot of Labour election posters and reminding people of what's been going on with the economy in the last few years, and particularly some of the economic mismanagement that they would like to portray the Conservatives as having taken during the last couple of years.
I mean, there's so many elections this year around the world that this is going to be very interesting to thread, because if some would like to see rates start to ease, let's say in the UK, before the election, I mean, we're already into the spring here. We're having the same dialogue in the US where people are mapping out these expectations for rate cuts. But history also tells us, like, once you get into a presidential election cycle, it starts to get a little bit messy if central banks are actually taking action in and around the actual date of going to the polls.
Yeah, and you also have to wonder that even if we see these rate cuts coming through, so we've said the US have effectively promised, which is odd, 3 rate cuts this year. The UK will probably have a few. The reality is, though, are consumers actually going to feel any benefit from that? Because that's ultimately what's going to influence what people are going to do in the ballot box. And I think the huge problem, it's interesting in the US, despite a booming economy compared to other G7 economies, consumers apparently still aren't feeling great. And in the UK, which definitely isn't a booming economy, consumers definitely are not feeling great. And the sort of voters that are going to be in that 18 to 45, 50 age bracket are not feeling great about things, and that is going to be reflected in the election.
I mean, at the end of the day, this story is just a reminder that all of these central banks, many of whom were seen as late to the party on fighting inflation, are all watching each other very closely. And this UK move maybe puts the Bank of England more in line with, call it the Fed, call it the ECB. Yeah. Plus you have Switzerland jumping everybody with rate cuts this week.
Yeah. Although everybody would love to have their rates, which are down, I think, at 1.5% or 2%, and their inflation. I mean, you know, that's a different economy. The oil tanker economy is the one that, the oil tanker analogy is the one that comes in. You cut rates, but that ship takes a long time in terms of its effect on the economy to have an effect. And arguably, to your point, have they steered too soon or too late? Because that's the balance, isn't it?
Yep, it is.